Investors are concentrating on long-end securities, notably the 2042 and the 2049 papers. Traders at Access Bank anticipate further demand across the curve as investors cherry-pick high-yielding bond instruments. I have Odinaka Linus-Nwokonkwo. He's the fixed income dealer at Access Bank. He joins me now for an update on the markets today. Thank you so much for your time today, Linus. And let's start with the sentiment we're seeing play out there and how the markets are interpreting the inflation figures from yesterday.
Okay, inflation yesterday printed at 21.09. That's the 2 basis points from where it closed last time. What we are seeing in the market is not a bit of a reaction. The demand is still there. People are still trying to buy papers at 16% levels.
Right, because let's talk to how we're seeing investors cherry pick these bonds now. Why we're seeing that interest for the longer dated bonds?
Okay, the interest, when you look at the bond, the 2037, which is on the run, the coupon is at 16.25%, which is kind of high. And also, when you look at where market liquidity was coming from last week, over 500 billion, we are still seeing some, because of that, there's a bit of interest on those papers across the fixed income. Even the Nigerian Treasury bills, the 9th November, there's interest on it at sub-13 levels. Remember, it closed at 13.99 levels.
Yeah, because when you look back at the bond auction this week, how do you compare in terms of performance with previous auctions?
When you look at it from the last auction, you could see that it's oversubscribed. 225 billion was offered, 344 was the subscription, and they sold 269. And when you delve more into that analysis, you'll see that almost 78 to 80% of the auction winning came from the 2037. When compared to the last auction, we saw renewed interest.
But in terms of how we're going to see that impact, what are your expectations for the interbank lending rate? Are we seeing that return to the double digits?
Yeah, interbank lending rate, when you look at the OPR and overnight, is at 16.17 and 16.5 as of yesterday, which is an increase of about 84 basis points. So because of that debt in liquidity, remember that we had the NTB auction and also the FX auction on Friday. So that kind of made liquidity to fade away. Also, there's a bond auction debit today coming up. So that's causing a bit of a hike in terms of the interbank money market rate.
Because now I'm looking at concerns for liquidity now. In the short term, you're seeing that squeeze is on. But for the rest of the month, how do you see that playing out?
For the rest of the month, I think we'll probably get back to levels where there are no liquidities, because when you look at the coupon payments coming in next week, it's just about 23 billion across two papers, 2028 and 2029. And also when you look at the NTB maturity, next week is about 213 billion, which I expect the government to roll that over. Omo maturity is also about just 40 billion next week. No really huge liquidity impact apart from the fact that we expect.
Okay, let's go to the currency market, and I'm curious to know what the outlook is, especially for the demand for FX, and also what we're seeing play out in terms of the I&E window.
The demand for FX has been the debt of funds in the FX market has been there. If you can say yesterday, what we saw was the Naira lost about 67 kobo to close at 446.67, which is the I&E market. We're not seeing any traction in terms of improved liquidity. However, we continue to see the central bank intervene in that space, especially for the SME and invisibles.
All right, talking about the central bank interventions, at the last MPC meeting, we saw the introduction of the CRR debits coming in there. And I'd like to get your assessment of the impact on the market in this time, because next week we're going into another MPC meeting.
In terms of when you look at what will happen, my expectation of the next MPC is that all those parameters will remain constant, because it closed at 15.5, and my own assertion is if they raise that MPR, so the objective is to taper the demand pull inflation. But if you look at what has happened with the CBN policy on Naira redesign, it's kind of bringing money back into the banking system. We don't expect them to also raise the MPR, considering that it might be a backlash on the cost push effect side. So for me, it might be retained this time around.